Right, here we go, Mint Makers chart of the week. Right, having punch ups in town centres gets you £80 fine, so this one's got to be a good one. Heavy night last night. Right, Juniper Platinum. This is the weekly chart. Had a head and shoulders. The price was sitting at around 130 and it tanked in free fall to about 7, 8 pence. Um, and guess where we are right now? We're at 8 pence again. So this one is well and truly on our watch list. Um, this is the weekly chart, so it shows you a rough direction of where it's going, but the volume has really kicked up as well. So that is a little sign maybe that buyers maybe are coming into the market, maybe wanting to buy on a double bottom. But let's have a look at the daily. We had a rally starting around 7.25 pence, went up to about 13.5. Um, we had a ascending triangle, broke on the upside, hit a certain point, and now it's come back down. Um, as we say in our members tutorials, the retracements are quite important. If you go beyond 66%, there's a good chance it won't be a retracement anymore and it will actually come back to where the rally started. Um, but that red line is one to watch because if we get a close above that, that is potentially a bullish signal. You'll probably get a close and then a back test the day after, and then as long as the back test is on low volume, you should take off. Um, Volume is declining at the moment as well. We don't really want to be buying unless we get a close above that red line. But volume is declining, which maybe is a sign that sellers are becoming less aggressive as we get down to sort of 8 to 7 pence range. Um, so yeah, I mean this is certainly one to be considering very strongly. We've got a slightly zoomed out look for JLP. Since we had that test of that sort of 7, 8 pence support line, the price rallied, and then since then it's been governed by that red trend line. Um, that's pretty much caused the price to be bearish. It also caused a wedge which broke on the downside, which has sent the price down to where it is at the moment. Um, what we want to be watching is for a break of that red line. A couple of closes above it would be a bullish sign. We could buy on the green support line and maybe even sell on the red trend line and then buy back on the green. You might get a couple of episodes like that where you can build up a good share holding, but you do not want to be out of this share when it does actually break that red line. This is one for a longer term trade because only for the fact that the returns will be so high, there's a good chance that you can double your money in this one. Right, second half of chart of the week is AGQ. This again has been in a downtrend and it's actually hitting quite a long-term support, which is why it's attracting our attention. Um, we've got a few things on here, so pause this screen and just have a little read. Right, so this green line, which is around 10 pence, we've only had 3 opportunities in the last 3 years to buy, which I think is a good enough reason to buy at the moment. We do have a projection of where the price could go. One thing that we need to point out is there is a potential for a downside here. So this is why we favour JLP at the moment, but that red line, if we get a close above that, we should well be quite bullish and go on a little bullish run. But we're zooming on this channel just so you can see what's sort of happening here. Right, so the channel, we potentially have a bear flag, which is something we need to be watching because that will send the price lower. But it's not as simple as that because we do have two different support lines converging together. We've got the long-term green support at around 10 pence, and we've also got the channel support as well. So we need to keep an eye on see if that bear flag does want to send the price lower, or if them two supports, because when you get two supports in the same place, they normally are quite a sturdy support. Again, if we close above that red line, bullish sign. But if we go on to the weekly, what we can actually show you is there is a big upside from here at 10 pence if you buy it on a breakout of that red line. but there's also potential for a downtrend to sort of 5p, but it does mean that long-term support needs to be violated to get that. So this is the weekly chart. It shows you sort of longer term picture, the bigger picture. You can actually see here we've had a descending wedge, and it does allow for 5p per share as a support line, which is, if we break this 10p, then that's probably almost certainly where we'll end up. But that's not a bad thing, because if we're not actually going to trade this right now, then we could be getting 5p, which would be an amazing long-term buy. But if you did want to trade this, the way to do it is buy on breakout of that red line. If that red line gets broken and the price starts trending up, there's your buy signal. If it doesn't, then maybe that 10p support won't. We do have a projection on this. We'll show you how to do this on our members tutorials, but it's around 35 to 40p, dependent on when the price actually breaks out of this little wedge. But at the moment, that'll be our advice. If you do buy at around 10p and that support line gets violated, then sell and then buy back on that green line, which is around 5p. If that doesn't happen and you bought at 10p and it breaks out upwards, then you should make a good 3 times your money. But the projection's only a target, it's not a certainty. So we'll know more as this one unfolds.